Put my usual attire on for the at-home recordings for CNBC. Gotta put my face on. Oh, I hate when I drop this stupid pad thing and there's a little bit of water in the sink and the makeup gets wet. I hate when my makeup gets wet. There's such weird problems to have. Stock market's falling on a bed here, so we're gonna do the CNBC video. I think I'm gonna short the Russell for Trading Nation. Then I wanna set up a trade in emerging markets. EEM's got a pretty good daily fib pattern that I wanna sell. Stock market's having a temper tantrum, just like Jake and Brody, when they don't get what they want. Liquidity, low interest rates might be taken away from stocks, and it could get interesting. So let's dive in. Of course, I've got the usual attire on. Record. Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. There's a different tone in the stock market here today. Halfway through July and then into August. We've stair-stepped very quietly and softly up to the highs, and then usually what the market does is it jumps out the window to get back where we started. We have $142 at risk per the entire option spread, which means we can make $258. We have a positive reward to risk ratio. So let's go ahead and place that order. You can go up to $1.43. That's right in between the bid-ask spread, $1.44. Review order, place the trade, and fill. So now we need to look at the risk on this trade, guys. The trade doesn't stop there. When you're doing a counter trend trade like this, you need to be very diligent about risk. So if we were to recapture the $125 mark, if we were to move back up to those highs, I want to stop out of this trade, protect my capital, and simply move on to the next trade idea. Trading against the trend of the market does offer a positive or a strong reward to risk ratio, but probability of success declines compared to a trend trade. So we need to be very diligent with our risk on this. All right, guys? For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade. We'll see you on the next video update. Talking a little risk reward there on CNBC. I think it'll work. Let's package it up, send it to CNBC. I want to short emerging markets as well. I don't want to all out short this market, but we got to start probing the short side here because it looks like the Fed rate hike is a real deal. The internals look good. Oh wait, I can't do it. I can't put a trade on with this. There, much better. Last time we talked about the Twilio trade. Let's go ahead and close that out because I do want to just take profits on that. Give back $100 today, up $250 in the trade, so not bad. Hopefully you guys made some money on that, but let's just go ahead and buy that guy back. I don't want to risk it with the market falling apart. So we're going to pay $1.40. Ooh, look how wide that is. Oh my God, $1.40 by $3.45. Let's put in $3.45 and see if we can get filled there. Confirm and send. That might have to work for a while. I said that last time. Remember I said it's going to take so long to get filled in Twilio? They fill really fast. It's kind of like their text messages. They're like, boom, right there. All right, so that's that. Now let's go ahead and let's do the EEM trade. Here's the emerging markets chart, right? This is the EEM. And the first thing that I want you to look at is the S&P and the NASDAQ broke through their 2015 highs, okay? Emerging markets made its high back in 2014, made a lower high 2015. It was at this time that broader averages were pushing to new highs. We have serious underperformance here in emerging markets. And with a stronger dollar, that's going to hurt emerging markets currencies, which should hurt this guy as well. Crude oil was up pretty strong yesterday, but it's starting to give it back. I think crude's just falling into a $40 to $50 range. So I don't think emerging markets are going to help from commodities, especially again in the face of that rising dollar, because that hurts those commodities, hurts emerging markets. So we're going to pick on EEM. So here's the daily, okay? And the first thing that you can kind of look at here, guys, is where is the major correction in this rally? Well, there's a big one right here, and it really kind of stands by itself, okay? So I see this as a big three-wave move, which is the signature mark of a correction, all right? But before we dive into that, let's take a look at just a real basic concept, just looking at this drop back up. We went right into the 618, just shy of the 786. This is your hot zone of potential resistance, and we could get a drop like that, all right? It looks like it's just a big A, sideways B, and then up and C. That's the signature mark of a correction. So this is starting to get me even more interested, all right? I'm going to bring one more degree of the wave count in. I'm going to hit down, And you can see, oh, I got to let motive wave do the work here. Decompose as an impulse, and there we go. Oh, yes, it's already there, but we'll just redo it. So we got a good 5-wave move up in A. And then a lot of people ask me, Todd, well, what about all this stuff they didn't label? Well, a good wave 3 is going to break down into 5 smaller waves. So we just go decompose, let motive wave do the work. Bam. And actually, I'd give motive wave a little help there and put it there. That's a little industry know-how there. So that's fine. So we got 5 waves up in A, and then beautiful triangle. Triangle is lower highs, higher lows. It's a 5-legged count here, A, B, C, D, E, and then we're rallying up in the final 5-wave move that will complete the ABC pattern. Okay, so let's look inside of this here just a little bit. Now, what do we have? We have the 618 and 786 retracement. That's up from the 2014 high. Plus, here's what we have. If you take the distance of A, compare it to C, that's called a Fibonacci projection. We taught that in the course heavily. So you just take this distance, and motive wave's got it built in for you. It's pretty easy. Just go ratio analysis, C versus A, which is right here. A 0.618 relationship was just above us. Now, what's also cool about this is we do this in time as well. So you take the time elapsed in A, multiply it by 0.618, and then compare it to the ongoing C. A 0.618 time was August 29th. So if you just kind of bring this down, actually, I'll bring it from the bottom up, okay, and you have 0.618 price, you had price and time coming together at about $39 on August 29th. We just missed it. That's awesome. Let's go out to the October monthlies. Let's buy the 37.5 puts. Let's sell the 33.5 puts. 42 days. So 37 halves are trading for $1.28. 33 halves are trading for 23 cents. That's not bad. We'll pay $1.06 for $2 wide spread. That's fine. $1.05. Pretty tight. We should be able to get filled. So what I'm going to do now is let me type this in to customers, and then I'll let them get in, and then we'll execute the trade. New trade alert, tier 4. Send. And there we go. Book profits on Twilio using Twilio. And let's start working the short side. Perfect. Okay, so let's go ahead and put the trade on. $1.05. Send. And you know the other thing that this market is, I'll get rid of the Elliott wave for now, is this is actually a big old Gartley pattern, Gartley sell pattern. So if I pull the harmonics in, there's your X point. You can combine Elliott and harmonics all the time. Okay, so it's kind of a big old Gartley sell, and the sell zone is right at the beginning of that purple, so we just hit the sell zone, okay? So, you know, guys like Pesavento and Gilmore, Scott Carney, I mean, they'll tell you that the Gartley should go down to the 618 retracement, and that's at 31.28, so see if we're right. Oh, this. Can we talk about this for a second? So I run a small business, so insurance for traders, right? It can be difficult. So we were on Trisha's Cobra because she was a school psychologist in Jersey. She's not going back to work. So our Cobra ran out and I had to make some changes, right? So I'm like, let me just try the Obamacare exchange. So we had to make a change. I went with AmeriHealth. And so this is from the health insurance marketplace. And I had to make an appeal to change something because I wound up paying for 2 policies at once. I'm like, let me undo this. So it says from Obamacare exchanges, it says, Dear Todd, we reviewed your marketplace eligibility appeal request. Your request states you want to appeal because you did not like the termination date of your coverage, but our records indicate you did not request a change through the marketplace. Based on understanding and the reason for your appeal, we can't act on your appeal request because you described an issue we don't have the authority to review. Okay, fine. So I went to AmeriHealth. I wrote to them. And they're like, AmeriHealth has received a complaint on your behalf from the U.S. Department of Health and Services regarding your insurance coverage. Blah, blah, blah. Based on our review, we are unable to process your request. AmeriHealth does not have the authority to make the requested change. So AmeriHealth doesn't have the authority to make the change on the policy that they offered because it's through the health exchange. The health exchange doesn't have the authority to make the change because it's a private company. Who can make the change?